Most people think building a 750 plus credit score takes years of hard work, a high-paying job, or some secret financial trick that only rich people know about. But the truth is, millions of people are damaging their credit score every single month because of small mistakes they don't even realize they're making. One late payment, maxing out a credit card, or applying for too many cards at once can quietly destroy your financial future behind the scenes. And the scary part is that most people only realize how important their credit score is when it's already too late, when they get denied for a car loan, rejected for an apartment, or hit with insanely high interest rates. Your credit score is not just a number. It controls how much money you pay in interest, what type of credit cards you qualify for, whether banks trust you, and sometimes even whether you get approved for a place to live. A higher score can literally save you thousands of dollars over your lifetime. The difference between a bad score and a 750 plus score could mean paying hundreds more every month for the exact same car or house. That's why in this video, I'm going to show you the smartest credit card tips that can help boost your score faster than most people think possible. These are simple but powerful habits used by financially smart people to build excellent credit without needing to be rich or financially perfect. And here's the good news. Credit cards are not actually the enemy. In fact, when used correctly, credit cards are one of the fastest tools for building a strong credit score. The problem is that most people were never taught how to use them properly. Banks know the system. Financially educated people know the system. But average people are often left making expensive mistakes. Some people think carrying a balance improves their score. Others believe closing old cards helps them stay financially responsible. And many people don't even know that using too much of their credit limit can hurt their score even if they pay on time. In today's video, I'll break everything down in the simplest way possible so you can start improving your credit immediately. We'll talk about the exact habits that affect your score the most, how to avoid the biggest mistakes, and the strategies people use to reach that powerful 750 range. Whether your score is currently low, average, or already decent, these tips can help you move in the right direction faster. And if you stay until the end, you'll understand why building great credit is less about making huge financial moves and more about mastering a few smart habits consistently over time. So if you're serious about improving your financial future, lowering your interest rates, and unlocking better financial opportunities, make sure you watch this video carefully because one small change in your credit habits could completely change your life. If there's one habit that has the biggest impact on your credit score, it's paying your bills on time. Payment history makes up the largest portion of your credit score, which means even one late payment can seriously hurt your progress. Many people don't realize that being just 30 days late can stay on their credit report for years. Imagine working hard to improve your score, only to lose dozens of points because you forgot one payment. That's why financially smart people treat payment dates like deadlines that can never be missed. The easiest way to avoid this mistake is by setting up automatic payments for at least the minimum amount due. Even if you forget, your account stays protected. Another smart strategy is using calendar reminders or banking alerts a few days before your due date. And here's something important. Paying on time consistently tells banks you are reliable and financially responsible. Over time, lenders begin to trust you more, and your score starts improving naturally. Remember, you don't need to make huge payments every month to build great credit. What matters most is consistency. A person who always pays on time will usually have a much stronger score than someone who pays large amounts but misses deadlines regularly. One of the fastest ways to improve your credit score is controlling your credit utilization. This simply means how much of your available credit you are using. For example, if your credit card limit is $1,000 and your balance is $300, your utilization rate is 30%. Most experts recommend staying below 30%, but people with the best credit scores usually stay under 10%. This is because lenders want to see that you can handle credit responsibly without depending on it too much. A common mistake people make is maxing out their cards even if they plan to pay them off later. The problem is that your balance may get reported to credit bureaus before you make the payment, making it look like you're heavily dependent on credit. One powerful trick is paying your balance early before the statement closing date. Another smart move is making multiple smaller payments throughout the month instead of waiting until the due date. You can also ask your bank for a credit limit increase after showing responsible behavior for several months. This lowers your utilization instantly without reducing your spending. Lower utilization signals financial control, and that's exactly what helps push your score toward the 750 range faster. A lot of people think closing old credit cards is a smart financial decision, especially when they stop using them. But in many cases, this can actually hurt your credit score. One major factor in your score is the average age of your credit accounts. The longer your credit history, the better it looks to lenders because it shows long-term responsibility. When you close an old credit card, especially your oldest one, you may shorten your average account age and reduce your total available credit at the same time. Both of these can lower your score. Imagine having 2 credit cards with a total limit of $5,000. If you close one card with a $2,000 limit, your available credit drops immediately, and your utilization percentage could suddenly rise. That's why many financially smart people keep their oldest cards open, even if they barely use them. A simple strategy is using the card for a small purchase every few months, like gas or a streaming subscription, then paying it off immediately. This keeps the account active without creating debt. Credit history is like a reputation. The longer and cleaner your history is, the more trustworthy you appear to lenders and banks. Most people only focus on their payment due date, but there's another date that can be even more important for your credit score. The statement closing date. This is the day your credit card company reports your balance to the credit bureaus. Even if you pay your bill on time later, a high balance reported on the statement date can still hurt your utilization ratio and temporarily lower your score. That's why smart credit users often pay off part of their balance before the statement closes. For example, if your card limit is $1,000 and you spent $800 during the month, your utilization looks very high. But if you pay $600 before the statement closes, only $200 may get reported, dramatically lowering your utilization percentage. This simple trick can make a huge difference in how your credit profile looks. Many people don't know this strategy, which is why they wonder why their score isn't improving, despite paying on time. Timing matters. By reducing your reported balance before it gets sent to the credit bureaus, you make yourself appear financially disciplined and low risk. It's one of the easiest hidden tricks people use to boost their score faster without spending less money overall. Every time you apply for a new credit card or loan, lenders usually perform what's called a hard inquiry on your credit report. This tells other lenders that you are actively seeking credit. 1 or 2 inquiries are usually not a big deal, but applying for too many cards in a short period can make you look financially desperate or risky. That's why people who constantly apply for store cards, financing offers, or multiple credit cards often see their scores drop unexpectedly. Each hard inquiry can reduce your score slightly, and too many applications together can become a red flag for lenders. Financially smart people are very selective about when they apply for new credit. Instead of chasing every rewards offer they see online, they plan their applications carefully and only apply when it truly benefits them. Another important thing to remember is that hard inquiries stay on your credit report for some time, even if you get denied. So applying randomly can hurt you without giving any rewards. Before applying for any card, ask yourself if it actually fits your goals and if you truly need it. Responsible credit behavior isn't about having the most cards. It's about managing credit strategically and avoiding unnecessary risks that damage your score. One of the biggest reasons people struggle with credit card debt is because they treat credit cards like free money. But financially successful people use credit cards very differently. They use them almost like debit cards, meaning they only spend money they already have. This mindset protects you from falling into high-interest debt while still helping you build excellent credit. Credit cards can be powerful financial tools when used responsibly because they offer rewards, fraud protection, and credit-building opportunities. But the moment you start spending beyond your means, those benefits can quickly turn into financial stress. Interest rates on credit cards are extremely high, which means carrying balances month after month can cost you thousands of dollars over time. A smart habit is checking your bank account before making purchases and asking yourself whether you could pay the full amount immediately if needed. If the answer is no, it may not be worth buying. Many people with high credit scores don't necessarily earn huge salaries. They simply practice discipline and avoid emotional spending. Building a 750+ credit score isn't about pretending to be rich. It's about proving to lenders that you can borrow money responsibly without relying on debt to survive every month. One lesser-known strategy that can help improve your credit score is becoming an authorized user on someone else's credit card account. This means a trusted person, usually a parent or family member, adds you to their account, so their positive credit history can also appear on your report. If the primary cardholder has a long history of on-time payments, low utilization, and responsible credit habits, This can give your credit profile a significant boost. It's especially helpful for younger people or anyone trying to rebuild damaged credit. But this strategy only works if the main account is managed properly. If the primary user misses payments or carries high balances, that negative activity can also affect you. That's why it's important to choose someone financially responsible and trustworthy. The good news is that you usually don't even need to use the card physically to benefit from the account history. Simply being attached to a healthy account can strengthen your report over time. Many people don't realize how powerful this strategy can be because it allows you to benefit from years of positive credit behavior almost instantly. While it's not a magical overnight solution, it can definitely help accelerate your journey toward a stronger credit score when combined with smart financial habits. Increasing your credit limit can be one of the easiest ways to improve your credit utilization ratio without changing your spending habits. Let's say you normally spend $500 every month. If your credit limit is $1,000, your utilization is 50%, which is considered high. But if your bank increases your limit to $5,000, that same $500 balance suddenly becomes only 10% utilization. This instantly makes your credit profile look much stronger to lenders. Many people are afraid to request a credit limit increase because they think it will hurt their score. But in many cases, it can actually help if done responsibly. The key is asking only after demonstrating good payment behavior for several months. Banks are more likely to approve people who consistently pay on time and manage their accounts well. However, getting a higher limit doesn't mean you should increase your spending. That's where many people fail. A higher limit should be treated as a financial tool, not an excuse to buy more things. Responsible people use increased limits to lower utilization while maintaining the same spending habits. This creates a stronger credit profile and helps move their score closer to that excellent 750 range much faster. Many people assume their credit report is always accurate, but mistakes happen more often than you might think. Incorrect late payments, accounts that don't belong to you, or even identity theft can damage your score without you realizing it. That's why regularly checking your credit report is extremely important. Think of your credit report like your financial reputation. If there's false information on it, lenders may judge you unfairly. Some people lose valuable points simply because they never noticed errors that could have been disputed and removed. Monitoring your report also helps you track your progress and understand what's helping or hurting your score. When you review your report, pay attention to payment history, balances, inquiries, and unfamiliar accounts. If something looks suspicious, report it immediately. Another benefit of monitoring your report is motivation. Seeing your score improve over time encourages you to stay disciplined and continue building healthy financial habits. Today, many banks and apps even offer free credit monitoring tools that make checking your score easier than ever. Financially successful people don't ignore their credit, they manage it actively. The more aware you are of your credit profile, the faster you can fix problems and make smarter decisions that lead to long-term financial success. One of the biggest mistakes people make while trying to improve their credit score is expecting instant results. Building excellent credit takes time, consistency, and patience. There's no secret shortcut that magically turns a bad score into a 750 overnight. Real credit improvement happens through small, smart habits repeated month after month. Many people quit too early because they don't see huge changes immediately. But the truth is that lenders want to see long-term responsible behavior, not temporary improvement. Every on-time payment, every low balance, and every smart financial decision slowly strengthens your profile over time. Think of credit building like going to the gym. You won't see dramatic results after one workout. But if you stay disciplined for months, the transformation becomes obvious. The same thing happens with your credit score. Even if your score is currently low, don't get discouraged. Thousands of people rebuild their credit every year by staying focused and avoiding emotional financial decisions. The key is consistency. Continue paying on time, keep utilization low, avoid unnecessary debt, and be patient with the process. Eventually, lenders will begin to see you as low risk, and your score will reflect that. Financial freedom is built through discipline, not shortcuts. So at the end of the day, building a 750 plus credit score is not about being lucky, rich, or financially perfect. It's about understanding how the system works and using simple habits consistently over time. The people with excellent credit scores are usually not doing anything magical. They're paying on time, keeping their balances low, avoiding unnecessary debt, and thinking long-term instead of chasing instant gratification. And the best part is that anyone can start doing these things today, no matter where your credit score is right now. Improvement is possible if you stay disciplined and patient. Remember, your credit score affects almost every part of your financial life. It can determine whether you get approved for loans, how much interest you pay, what kind of credit cards you qualify for, and even the opportunities available to you in the future. A strong credit score gives you more freedom, more options, and more financial power. But here's the important thing most people forget. Your score will not change overnight. Real progress happens slowly, and that's completely normal. Don't get discouraged if you don't see massive results immediately. Every smart financial decision you make today is building a stronger future version of yourself. Even small habits, like paying before the statement date or keeping your utilization low, can create huge long-term results if you stay consistent. The key is to stop making emotional money decisions and start treating credit like a tool instead of free money. Once you master that mindset, everything begins to change. If you found this video helpful, make sure to hit the like button and subscribe to the channel, because I'll be posting more powerful financial tips that can help you save money, build wealth, and improve your financial future step by step. And I want you to comment below and tell me your current credit score goal. Are you trying to reach 700, 750, or maybe even 800? I'd love to hear where you are in your journey. Thanks for watching. Stay financially smart, and remember this: your future financial freedom is built by the habits you choose today.